I'm 680 News Senior Business Editor Mike Eppel. We had the start of the second quarter earnings season for the big Canadian banks today, led off by the CIBC, the Canadian Imperial Bank of Commerce, giving a bit of a template for what we can expect from the other big banks set to report over the course of this week and next. Commerce made $1.33 billion. Pretty good, and more or less in line with what was the consensus estimates. Having said that, the bank is forecasting pretty much a flat remainder of the year, and with good reason. The real estate market has been choppy, to say the least, to start the year, so they're seeing a little less business in their mortgage operations, and also personal banking numbers were down a little bit on a year-over-year comparison. CIBC share price, which prior to today had been up by about 10% for the year, giving back a little bit of ground on Bay Street. Mind the gap, the price differential between Canadian and U.S. oil prices now at the highest of the year. The U.S. benchmark in and around $62 per barrel was down today, as U.S. oil inventories have been doing nothing but climb most recently. But the Canadian benchmark, Western Canadian Select, is now at around $46 per barrel U.S., so about a $15–16 per barrel price differential. The Alberta government rescinding the production cuts that had the price for Western Canadian Select elevated to start the year. Starting to see some declines here with more oil coming out of the oil sands. Still big questions about how it'll actually get to the market with the pipeline constraints. Canopy Growth, the biggest cannabis company, looking across the pond at a deal. It is buying a company called This Works out of the UK. It's a skincare company that makes creams infused with CBD. And that is one of the key ingredients for cannabis, and it could be another inroad for Canopy Growth into the Eurozone for markets. And it's paying about $75 million for This Works, and investors applauded the deal, seeing Canopy Growth up by a couple of percentage points on Bay Street today. The doorbell is ringing for Avon products. A 20th Century Cosmetics company seeing a buyout bid from the company that owns The Body Shop. It's called Natura Cosmetics of Brazil. They're offering about $2 billion for Avon, which has struggled in recent years, somewhat out of favor with today's consumers, but the share price today jumped by 25% in U.S. trade. U.S. telecom equipment provider Qualcomm got slammed by the Federal Trade Commission in the States today, accused of anti-competitive practices, basically accused of using their dominant power in telecom equipment to overcharge on royalties. This had Qualcomm shares down more than 10% today. Mixed signals on the retail space, with earnings from the likes of Lowe's, the home improvement retailer, seeing its stock price sell off by 11% as they lowered their guidance on the year, saying they're seeing increased costs and competition from the likes of Home Depot. Meantime, Nordstrom, the luxury department store retailer, saw its share price down as well today as it lowered its guidance for the year. A winner in the U.S. retail segment right now? Target stores hit the bullseye with its earnings in the latest quarter, raised its guidance, share price up 7% on Wall Street. From the 680 newsroom, I'm Mike Eppel for City News.